Good morning. Thank you. Very nice. You can come back anytime. Welcome to day 2, and welcome to the Innotribe stage. Now, in our flagship session today, we'll delve into the transformational potential of stablecoins and examine how programmable money may rewire fundamentally global commerce. Now, we've been doing this session since the advent of Innotribe back in 2010. I still remember back in 2012 talking about digital assets. In 2018, we talked about the hyper-personalization of financial services. So you may say that we've had a bit of a crystal ball when it comes to the future of finance, and you wouldn't be wrong. But after covering so many different aspects of the future of money, we decided a few years ago that the conversation had expanded beyond that. So we decided to launch a new version of our flagship, the future of value. Because that conversation has moved on, and as Innotribe, so have we. So let's talk about those new potential rails. With our announcement of yesterday, the conversation has become even more pertinent. Now, our thought leaders today will talk about how stablecoins may reshape how we see the future of finance, but also the very nature of value creation, storage, and exchange in our increasingly digital economy. So please welcome to the stage our panel led by the wonderful Lida Gliptis.
It's good to be back. I have been leading these conversations for many a year. Occasionally, we are asked to look back and see how right we have been in our predictions, and I'm pleased to say that we have consistently asked the right questions, even if we didn't come up with the right answers. And that's what we hope to do here today. We have a panel of experts. We have a series of different voices. You wouldn't be here if you hadn't looked them up. So I'm not going to give you long bios. I will use the time we have to delve straight into the conversation. If you've been following the future of money, future of value dialogue, part of what we try to understand is what's next, what's real, what should we spend time and money on, not just because it's interesting, but because it's material. So this is what we want to talk about today. We want to talk about how stablecoins are being thought about across our organizations and what you should be thinking about. Because the reality is, everyone is talking about them. A lot of our sessions here this week are about them. Every banker I met this week said that it's one of their top 3 priorities, AI being another one. Everyone said they're doing something and then trailed off a little bit. So let's dive right in. How real is it? How big is it? Does it matter? What's next? And most importantly, for the decision makers in the room, what are the pitfalls? I will start with you, Renee. We have some huge numbers thrown about. The $1 trillion wealth transfer, the 352 billion revolution, these are numbers from yesterday, 1,500% increase in market cap. What does it even mean? Is this real? Is this just the currency of the crypto market and we can all go back to our day jobs? Is it just a cost advantage play and I'm a little bored? What are we dealing with?
Thanks, Lida, and thank you so much for having me here. Look, great questions. I'm going to throw some of our numbers out. So Jeff Kendrick, our head of research at Standard Chartered, put together a research paper earlier in the year which talked about stablecoin market cap reaching 2 trillion. And what's interesting about that, when we look at where stablecoins are being used today, we're at a point where they've broken out from being a settlement asset for crypto trading, which is where it all started, and we're starting to see the adoption in real-world use cases. What's happened in the last 4 years is we used to see about 50% or more of the stablecoin issuance being used for cryptocurrency trading settlement. 50% now is used as a savings mechanism. Now that's going to freak all the bankers in the room out because most of that is not earning interest. But what we're seeing is a lot of emerging market folks are using US dollar stablecoins in particular to mitigate the risk of inflation or currency debasement, and even more importantly, and I think this is an important point, to mitigate the risk of the credit risk of the banks in their market. And one of the things, I guess, the average person doesn't think about very often is when you put a deposit in a bank, you're lending the bank money, and so therefore you're taking bank risk. Now, we all spend a lot of time talking about that on a daily basis, but it rarely comes up in the conversation around stablecoins. So on top of that, you then have a much higher increase in utilization of transfers outside of that use case of settlement. So for high volume wallets where the stablecoins come into existence and are then burned or sold, we've seen an uptick in that. It's about 25% now. And we're seeing utilization across not only individuals for remittances, but also for corporate treasurers looking to solve big problems. One of the problems, which is always a conversation here at both Innotribe and the broader Sibos conference, is access to banking in regions where correspondent banking has retreated. And so I think the fact that we now have stablecoins solving that problem, and you might say, well, that's just to get around all sorts of financial crime controls, etc. But actually what we're seeing is that there's a lot of credible players working in that space, solving commodity trading transactions and real-world transactions. So I think we're at the point where this is no longer just an experiment around how we settle our crypto trades, but this is starting to enter the lives of individuals in a very meaningful way.
So it's very much here. Thomas, you face into innovation, transformation, and change for an organization that has been here a long time. Mm-hmm. You have been thinking about this for a long time. In the context of everything Renee says and everything you have seen, is this a brave new world? Is it a stepping stone? Is it a detour that's just distracting us a bit? Where should people who are dealing with a complexity of the world out there think and spend their time and money? Because that's the question we always get after these sessions. This is really interesting, but should I lose sleep over it?
Yeah, well, I don't lose sleep over anything, so that's probably the wrong question for me. But it's pretty early days. So we see the legislation coming in place in the U.S. with the Genius Act, but that's not the full story, right? Because the question is what happens in other parts of the world, and how are they going to react? And guess what? In some places of the world, they don't think stablecoins are a great idea, and there's concerns about things like credit risk with private issuers, for example. So I think it's too early to tell. I think the breakthrough point here is that the value is going digital, and it's not just about being able to do something better or differently from what we do today. The question is, if you have programmable money, including stable coins, what business models does that open up? What's now possible that wasn't possible before? So if you kind of look at the arc of innovation, a lot of times what happens, the very first steps are to kind of do something better, faster, cheaper, safer, de-risk it. But then now that we know it's possible, and we think the announcement of the Swift ledger yesterday is that catalyst for people to say, wow, scale is really possible. This is not a niche thing. But it's too early to kind of make a bet. I was in Dubai a week or so ago. They have stable coins, CBDCs, and tokenized bank deposits up and live, all three, in different sectors, different use cases, different parts of the economy. Now that's not an indication of where we're going completely, but it's a pretty strong signal that we're going to live in a world with different forms of value, in a multi-chain world, and the signal to me is strong. And I think the other thing we need to look at is what problems are we actually really going to try to solve? We were very specific with the Swift ledger announcement yesterday. We're going to focus on the interbank market, not because of the technology and a really transformational layer on top of the network, but we're going to go right for a real problem for the banks. They want to be able to offer 24/7 payments globally, safely, obviously in a regulatory way, at scale for their customers. So we need some real use cases here, and we need to focus on the value created. Some of them might be kind of closest to the pin in the first round, but I think it opens up everything from there.
There's a lot in what you said I want to unpack, and there's a couple of things I want to pick before I go back to the rest of my questions.
That's why I'm sitting in the middle.
I know, right? So you can't escape us. But I think the first thing I want to pick up is not every jurisdiction is happy about this. Some are leading the way. Vishal and I were having breakfast this morning, and he was like, you need to regulate the living daylights out of this. So Vishal, I will go out of sequence here and come to you. Former custodian, we used to work together, turned regulator, gone all the way to the other side now. Where do you think regulation comes into accelerating all the question marks that Thomas threw on the table just now?
Again, without delving or going hard against certain regulators across the world, you cannot over-regulate innovation. You should be in a place where you actually foster that whole space, right? And given the status of stablecoins right now, Rene said it right. Now you have options. A couple of years ago you didn't. You have options now in terms of treasury management, where people put their money, the payments, the settlements. You have an option, a wider range of options. But the root at the end is still a stable coin is, depending on which regulator or which country, the way they see it, depending on how they perceive a stable coin, is it going to be back one-to-one to a USD or any other local denomination or whatever it is. From a regulatory perspective, they will always look to see whether you have that. Is it reserved? Do you have the tech tools in place, cybersecurity, to make sure that it's not hackable or any of that kind of stuff? Is your consumer protected? If you meet those requirements, the basic requirements from a regulatory perspective, they will obviously want to make sure that the governments that they work for will help that, because that makes people's lives easier. That gives people's options. And it's not just the businesses or the corporates or the FIs, it's the people they cater to. And depending on how good your economy is going back to Rene's point, it is your reserve. If your economy, if your currency is not doing too well, guess what? Where am I going to put it? I can't leave it with my local bank and keep that under my pillow, the money under my pillow. I want to save it somewhere I can access it, my family can access it, my mom living across the pond can access it. I want to have accessibility, I want to have protection. And from a regulatory perspective, now these guys are looking at it that way. Every single regulator is.
And this is a topic we will come back to, but I want to take a pause here. Nick, I want to come to you and ask you the question that decision makers often grapple with. Great, these guys are painting a picture that I believe, but I have a whole host of other pictures that demand time, money, allocations of long-term conviction from my organization. So how does this play with everything else in terms of not just the technology, but the headspace of how we organize ourselves, our organizations, our priorities?
I'm not sure I can touch everything else, because I think there's...
Got 32 minutes.
Okay, good. Let's go. Well, basically, we're rewiring the bank, the world of financial institutions, and the way we deal with money, right? With everything we do, whether it's stable coins or payments, data. Everyone talks about AI, but the basis for AI is data. So really we're laying a whole new infrastructure as to how we deal with money and transactions, and even what money is. So I think that is something every CEO should look at. And then there are different expressions of all of this, right? So in my world, we talk a lot about how we deal with data and open finance. That's a phenomenon. You talked about Dubai, right? And Dubai is creating a trust brand around open finance. And Brazil is functioning on open finance today. In the EU, we've still got a lot of hesitation around it by a lot of players. But if we don't have free data flow and interoperability globally with these topics, then it's going to get stuck somewhere, right? So we have to look at the whole picture of interoperable, data-based money flows, transaction flows, data flows, in order to enable a whole new system, infrastructure, and regulation of the way we deal with finances. And that's how I would look at it. I mean, it's very high level, but...
Yeah, and it's stressful, right? If you're a decision maker, you just made life harder. I remember my own CEO at times going, do I have to wrap my head around this before I retire? And back when he asked me that, the answer for a lot of things was no. But the pace at which things are moving now means that the answer is always yes. And for those of you who were with us for the very first Future of Value 2 years ago in Toronto, we had Sergey Nazarov on stage saying, this isn't coming, this is here, and the acceleration will be off the charts. So here we are. Rene, Thomas mentioned that we need to think about use cases. Can you bring it to life? We have corporate treasurers in the room. We have B2B payments. We're losing sleep over settlement. How does this make our life simpler or harder?
So I love the question about use cases, because as finance professionals, we get very enamored with use cases that fit our worldview. And our customers don't really care about that, right? So our job is to make money that works and provide tools for money for our clients. And our clients solve problems with money, right? So it's kind of like, I think it's a little bit, we get super distracted. So when we all sit around a boardroom table and we go, oh, let's talk about the use cases, that is a rapid pathway to inertia. So Tom mentioned it's too early to take a bet, and I completely disagree with that. I think it's too late not to have a bet. The scale of this is moving so quickly, as Lita mentioned. We're already at 285 billion or thereabouts market cap for stablecoins. And what's interesting about this is I think we think all new money is the same, and I think that's not really a helpful construct. So I spend a lot of time with central banks, and the question I often get is, what can we do to increase the adoption of tokenized deposits so stablecoins aren't a thing? And there's a problem with that construct because they solve different problems. So what we've discovered throughout the last decade plus of innovation is that permission chain projects scale very well within an organization, and public chain projects and public chain infrastructure scales very well across the internet and outside organizations. So by their very nature, tokenized deposits work exceptionally well within a firm, but require a clearing infrastructure in order to work across firms. Whereas stablecoins live on an open internet-based infrastructure and don't require institutions for the transfer of value. And I think this is a really important thing for us to grapple with as a financial services industry in order to stay relevant. So I think from that perspective, like we should be, that imperative to move should be, front and center. I think I support the fact that with that announcement around the SWIFT initiative is critical as we think about stablecoins, as we think about programmable money. But it's much broader than just looking within our own firms, and we need to be following our customers. The risk we face is this. Our customers are starting to use, like the people who actually use money, right? And not us people who just play with the money and build the infrastructure. People who use it in their everyday lives are making decisions based on functionality. And so a lot of the economic assumptions we've made around how money works are no longer holding true. So from that perspective, I think it's absolutely critical that we do make a bet now, and that we start investing immediately on the things that we think our customers, or where our customers are going to be. And just to pick up on the data point, that's critical as well. So we're used to an environment where we do KYC and we hold data within an organization, and that becomes the identity against which we offer financial products. What we're going to need to do is start projecting identity beyond the organization without disclosing private data in a way that is functional and can allow access. One of the things that freaks me out is when we've got AI agents interacting with programmable money. As a firm, I'm pretty sure I'm going to be expected to make sure that if an AI agent is interacting with money I'm keeping safe for a client, I'm going to need to be able to prove that I knew the AI agent had authority to access that data and conduct that action. And the customer on behalf of who that action was being taken is the actual customer that authorized that. And that's a lot to unpack in a world where we live in this, where we control everything, right? So, fun times.
Well, I guess you're touching back to what Nick was talking about earlier, and I will come back to you with this, Nick. In the world where everything is moving very quickly, we need a holistic plan. We don't have a holistic plan, neither from a policy perspective nor inside our organizations. And I'm not going to beat on anyone, because it's impossible to have a holistic plan. But the worry is that as everything is developing separately but interacting, we are definitely missing out on things. What are we not doing? I come to you with all the hard questions.
Well, I think Renee touched on something super important. I think we don't talk about identity enough, right? I think identity is exactly central to everything, and we dabbled at the whole consent-based, permission-based stuff in open banking, right? Where we allow access to highly personal data. When we, as a person, allow it to give it to someone else, right? So that's the principle of open banking. That is becoming more and more important, where we have, in a world where data flows, money flows outside of that custodian and KYC environment that you mentioned, KYB environment. So identity should be something I believe banks can become really good at. and it could be a really key part of the future of a financial institution to be a guarantor for identity. And I think those are the sort of things that are centered around all of these initiatives. Permission-based access to data, to money, to all sorts of things that are not kept, on a mainframe in an IBM on an ABM server anymore, but they're floating outside based on tokens and identity wallets that people carry on their phones. And data wallets. So I think that putting the customer truly at the center, and that sort of is their identity, is where they control access to all sorts of things, and essentially their data. I think that is something we should focus on, and then a lot of other things come. And I think the regulator also has a flaw in this, because we have all these different pots of regulation in Europe. We have DORA, we're going to get FIDA, all sorts of things. And then, MiFID and whatever you have. But no one is looking at the whole thing together and what it does with a business, a consumer, and a financial institution, the like. So I think holistic is
So there's
important.
a lot I love about what just happened. The first one is that we're having a stablecoin conversation and somebody mentioned mainframes. I have a bet with myself that I won't ever go through a day in this business without someone mentioning mainframes, so thank you for that. Another day where I've actually lived up to it. But you paint a picture that I think we want to stay with for a minute. And Thomas, I will come to you. In the context of everything, and with the view that we want to protect consumers, and from the picture Vishal painted, actually, a lot of what we're doing here gives consumers options. I want to ask two sides of one question. A lot of this is developed in consultation with central banks, as Renee said. I guess my question to you is, what happened to CBDCs? Can we forget about that now?
No.
Or are we still spending time on it? And where does the protection against private money or entities that are not regulated going merrily down this path come from? And should I worry about it? Maybe I shouldn't worry about it. Maybe private money is a good thing.
So the first part of the question about CBDCs, they absolutely haven't gone away, and we're participating in live trials for wholesale use cases with the ECB now. So it's happening, and they've been very public that there's a road to production on those. So CBDCs aren't dead. They're live in Dubai, as I mentioned before. It's just another alternative in terms of the future of value, right? So it's just another way that's going to serve a certain segment. When we talk about stablecoins and consumer protections, for example, there's a really stark difference between the retail world and the institutional world. I could send Renee $20 in USDC on a MetaMask wallet, and it is what it is, and it'll be there in 1 second, and it's free. That's fantastic, right? If I'm instructing $200 million from the US to Singapore, you can't do that. Are you sending it on a sanctioned wallet? Does it complete the travel rule? If you used a private stablecoin that trades on and settles on 16 different blockchains, which one was it on? What was the transaction ID? How are you going to do the FX on the back of that? All of these things matter in institutional markets. So retail and institutional stablecoins are completely different ballgames in terms of what's required and how the money flows. And again, stablecoins are one option in this area, and we decided to come up with a very narrow use case for the first focus area for value for the banks for tokenized deposits. But Renee hit on something really, really critical here. All the stablecoins today are actually settled in open public blockchains. I think Circle settles, which is a private stablecoin, settles on 16 different blockchains. So now we have this world where value is moving around. If you think about the matrix of retail and institutional, and existing payment rails and on-chain, that's fascinating. So how do we orchestrate between existing payment rails, which I think most people would agree are going to exist for the foreseeable future, right? And settle that on a public blockchain. How does that get orchestrated safely, and how does that make sure auto compliance is done? That's a fascinating inflection point we're at. We're not there yet, but that's fascinating to get there. We need to figure that out.
Hello? We got handed this and it doesn't work. Okay. I know a firm that can help. At Standard, we've got a licensed bank with custody. Is this better? A licensed custodian. We've got Zodia Markets who can do the FX. We can tell you what blockchain it's on. We can comply with the travel rule. So, we're already here. But I would say it's just very, I know I'm talking out of turn, so I apologize for that. And I apologize for the audio quality. But 3 things, right? Stablecoins are great for individuals and corporations who want to move money. Tokenized deposits are best for banks and help move efficiency around within banking institutions. And CBDCs are best for governments, for economic management. And trying to conflate those 3, I think, is unhelpful.
Yeah.
We see you spoke out of turn, so I'm going to stick with you. Because the picture you're painting, all of you, is compelling, but it is one of fragmentation, if that's the right word. There's a lot going on. I guess the question is that to be expected? And how are people who haven't gotten religion in this, but still want to participate and take their organization on a journey, how do we navigate this fragmentation?
I think that's a really good question. So I think financial services professionals have a responsibility to help our clients navigate that. There's no question we're going to have multiple stable coins, multiple forms of money, multiple ways for people to interact with that money, and that proliferation is going to occur. I think it's optimistic to think we're going to sustain the singleness of money, which the BIS likes to talk about, and I think very optimistic probably. And so the reality for all of us is, as financial services professionals, we need to figure out how to deal with many different types of money, how to take that complexity away for our clients, and how to help coalesce that around something which will eventually come back to a simplified version of financial services. So this is no different to several proliferations of money we've had throughout history. And what happens is we have this Cambrian explosion of forms of money, and that has some benefits and quite a lot of challenges. We work through those challenges and we coalesce to a much more stable state. And that's a very normal thing throughout the history of financial services.
Expect a prolonged period of disruption is what I'm hearing.
Correct.
But I want to stick with the BIS report. They're right there, so they'll probably wait for you as we're getting off stage. But Vishal, I will come to you. We all read that report, came out a few weeks ago, and one of the things he talked about was concerns around monetary sovereignty. Like, all of this is great, but is it, do we have the right safeguards for people, but also, is it changing the way money operates from a power and structure of statehood dynamic? So I guess my question for you, Vishal, is that an idea of the past? Should we actually move past tying ideas of statehood and sovereignty to money? Or is it a case of the BIS is right, we just need safeguards, we'll go back to your point from breakfast, just regulate the living daylights out of this?
No. It's not about regulating the living daylights out of it. It's more about making sure you have the right controls in place. Going back to what René said again about which sector can use which version of this technology-induced coins, be it stable, deposits, or CBDCs. For sovereigns and the governments of the world, the CBDCs make more sense. But again, going back to my previous point, it's the people. It's, René mentions, it's the end consumers. We need to give them options. Again, if I'm sitting in a country where my currency has been devalued significantly, and what I had kept under my bed is not worth as it was 2 years ago, what am I going to do? If I don't have an option, because we've spoken about mobile penetration and internet over the course of the last decade. We've beaten it to death. But if I have that opportunity at my fingertips to just move that money and keep it in a wallet and keep it there as long as I need to, with a currency that I understand will appreciate in value or stay the same in value, will not depreciate as much as I'm in right now, I would want that option. I would want that option, my people would want that option, governments would want that option as well. Now, if this would then entail different parts of that community, different parts of our financial services fabric that needs to change and look at these technologies with a different lens, so be it. It has to happen.
So it's compelling.
Yeah.
I'm listening to you, I'm like, okay, I'll sign. Where am I signing? René, I'll come to you. It is compelling. You painted a picture that I don't think anyone can argue with. And people's organizations believed it even before we got on stage, because you see engagement, you see questions, you see question marks. What you don't necessarily see is those use cases that rock the world. So as we bring this home, the consumers seem to want it. Regulators, particularly in certain markets, are leaning in. We're seeing a lot more activity in Asia. We're seeing more activity in the GCC. Inside organizations, I'm seeing use cases on cost cutting. I don't see bold moves. I understand that we don't make sudden movement in our industry, but should we be trying to solve BAU problems with this? Should we be actually bringing it into our organizations in a more meaningful way? And as, you know, we have a lot of TradFi people here. It's mostly TradFi people here. What should we be using this for as we get out of this session and back into our offices?
So Tom mentioned earlier that you know, banks really want to move to 24/7 real-time payments. And I kind of disagree with that, because if we did, we would have already done it, right? So we haven't done that, which is why these other forms of money exist to solve that problem. When we think about this, what that means is the way that we make money as institutions is going to fundamentally change. There is a risk with the growth in stablecoins that we may see deposit outflows from banks. We may see this construct in the US of a narrow banking style stablecoin and credit creation being separated from the payments instrument. We don't know, right? We don't know how that's going to play out. But we can imagine, and many of us, I'm sure, are looking at our financials every year and trying to figure out where the most margin compression is happening. But the question is, that's all heading in one direction. So when we think about the business models that we operate and the way they serve our customers, this technology and these new forms of money means we actually have to question how we're making money. And so from a bold move perspective, I think the hardest thing is to step out of the paradigm in which we've operated across our banks, which is the branch and retail distribution, the wholesale banking construct, which consists of cash management, trade, security services, markets, capital, debt capital markets, etc., and kind of go, okay, well, that's today's paradigm. How do we step above that and go, what could be different tomorrow? So yes, there's an element which will be operational efficiency. Yes, there's an element which will be commercial. But I think when we try and apply the paradigm of yesterday to a technology that fundamentally, or an operating system that is fundamentally different with the way that we construct financial products, that's where we find that kind of real use case that we need to focus on. And yes, I said use cases.
Whoever had that on their bingo card. Nick, you're not steeped in this as much as some of the other panelists are, and I think it's fair to say that that's the reality of a lot of the people in the room. They're facing into this at the same time as facing into a whole host of other things. And there is that standing joke that some markets innovate, some markets imitate, some markets regulate. We definitely, in the European context, tend to wait for regulation. So how do you see this space? Do you think we will wait for regulatory directives before we lean in? Do we need more institutional buy-in, or do we just need the courage to manage our own risk registers inside our organizations? If we believe this is the future, what would it take for us to get moving?
Well, I think, first of all, I love the word belief that you just mentioned, because I think we just need more belief in things. And that's what Renee also said earlier. We need to place bets, and we need to treat regulation as something, yes, we need to comply with, but at the same time, regulation is an opportunity. So you can meet regulatory demand, so to be compliant and not get fined, or you can say, what business opportunity does this new regulation require? And then there's also the time before regulation. So in Europe at the moment, a lot of people are saying, open finance may or may not happen, so we're not going to do anything right now, yet calling for big AI strategies, right? So why am I not using all the data I have and do everything I can to serve my customers better now, and then be a step ahead when the regulation comes? So that also applies to new money and new currency. I tend to hear a lot about, cost pressures, margin pressures. All that's fair, but what I'm missing a little bit is more of a vision again, and I think this time calls for courage, which is hard if you measure it by your share price and quarter by quarter. So the incentive structures may have to change in order for our sector to remain competitive. And may I say something else? I think what's really needed is investment by the industry, because we're leaving a lot to venture capitalists. And I love venture capital because otherwise I couldn't have built the companies I've built in the past. But it's risk right? So we're building new infrastructure, and if that infrastructure is financed by a trade that is used to placing bets, by investing small tranches of their money into different pots and making sure one of them works, well, if the other 9 are fueling our technology and our infrastructure, and the plug's being pulled where that infrastructure's gone, right? So we need more investment by the industry and potentially governments into new financial infrastructure, be that money, alternative money, be that data, be that, artificial intelligence.
You asked for 3 things we bankers don't like to give or see. More regulation, courageous decision-making, and more money. You made 0 friends here today. But you're probably right. And I think one of the things that I'm definitely feeling as I hear you talk, and Vishal, I will come to you with this, is that our mental furniture is wrong for this conversation. Our mental constructs need to shift. Everything you guys have talked about, particularly you, Renee, suggests that the way we think about what we do for a living needs to shift. We don't all do this day to day. So, Vishal, do you have any advice as we go through our day-to-day jobs, but simultaneously try to shift our mental furniture to be able to understand and place bets in this space?
Well, innovation was because of different situations, necessity, right? That's what breeds innovation. And now we are in a place where, okay, we have a few. When tech started coming out a decade ago, when we started bringing on this whole fintech thing, you had small little apps that all they were solving for is helping peer-to-peer. All they were doing is just transferring money from one location to the other. As it grew, you had the bigger banks looking in. As that grew, you had some of the governments looking in, regulators looking in. And then the base for them to kind of set up shop and then do business increased. The barriers to entry increased. Today, you'll have tons of people trying to issue stable coins, and which you could do maybe 5 years ago. Now you can't. Now regulations are in place. You want to do stablecoin business, you need to get a license. You want to move stablecoins around distribution, you need a license. Same way, once the barriers to entry increase, you'll see more of these going down slowly. But the mindset of having, is this still a coin? Is this still a digital money? Is this, what is it, a security? Is it something that I can hold on to? Do I have to treat it the same way? That depends on how different people perceive it. As a regulator, do I see the risk in it? If you want to see this as a product, as you want to see this as a derivative, by all means, go ahead. But does it taste, look, smell, feel like one? No. Depends on how it is. So regulators need to focus on the actual, what is it and what is it solving for, and the risk associated with it, and change that mindset from, no, it's not an asset, maybe it's a security. Is it? We don't know. But again, like you said at the start, more questions. But you need to keep asking those questions internally.
People coming to the Innotribe stage are used to leaving with more questions than they had when they arrived. It's what we do. But as we're coming to the end of this session, Tom, I want to come to you. It's rare that we come here to this stage to talk about an innovation that is evolving so rapidly. We usually come here to look at the future. This is both the future and the present. It's also rare, given where we are, that we get together to talk about something that affects all of our organizations, but also affects consumers. We rarely talk about consumers at Sibos, not because we don't care, but just because of what we do for a living day to day. So we've talked about opportunity, we've talked about regulation. I want to talk, as we wrap this up, about responsibility. Because our organizations don't mostly have consumer-facing capabilities, or at least if we have them, they tend to not be here. But this goes all the way through. So how would you advise people to think about the opportunity, but also the responsibility?
Well, I mean, the responsibility to maintain the trust in financial services is shared with all of us, right? We all have to do that. And I do, to use your furniture metaphor, in this role, and I love my job at Swift, I'm speaking to a lot of people inside of banks that are building new furniture factories. They really are. It's not about just move the chairs around and do we like the color white and is it comfortable. They're looking to build new factories that look more like Tesla plants than how you'd expect a manufacturer in North Carolina to look. And when you start thinking about things like the intersection of agentic AI with programmable money, it's fascinating. And so, sometimes people say things that really stick in my head, and a lot of times that's my wife because she's really, really clever. But I was talking to some bankers, and what they said is, do you realize in the not too near future, you're not going to be selling to human beings. You're going to be selling to AI agents. Just think about that for a minute, right? In terms of building the new factory. So, your point around the responsibility, yeah, we're going to start off with some use cases. We're going to prove some value, but this is going to change everything. Programmable money with agents that plan, observe, monitor, and act on behalf of humans in an automated way. And now you have programmable money that goes along with that, whether it's a fraud check or a compliance workflow or triggering a payment on a public blockchain. This is all happening. So the call for responsibility, the bar on that just is rising very, very fast. And we all own that responsibility. It needs to be done in a very kind of risk aware way. The public-private relationships that we have, that's some of the most important work we do. Renee and I were just in Basel a couple of weeks ago, right? So we're not in this camp that the regulators are the problem holding back progress. They have to be in the center of the conversation to make sure that what we're building, it's not a onesies and twosies and kind of solving a small problem in one part of the world. It's about scale. And it's about scale that we can all be comfortable with and the confidence of that, as you have agentic AI flows triggering programmable payments. So this is a fascinating opportunity, but it's not either or, it's not us versus them. It's public-private, it's the innovation together, and it's moving those things forward, not on kind of the onesies and twosies, but at scale. And that's what we do. We do scale.
And everything you have been saying, even though you haven't agreed on everything, which I enjoy sitting over here, points in the same direction of the amount of effort and conviction that has to go into this. But also, you've made it very clear every step of the way that the mindset that we have had as an industry in the past of each innovation being the thing we hope solves everything is a thing of the past. Now, as we bring this to a close, Renee, I will come to you with a final question, and it's a very practical one. Sibos is an unusual conference in that it has more decision makers in the room than any other event of its kind. And these decision makers come here for a break from the booth, but also to learn and to walk away with some insights that will help them make decisions. Prioritization, focus. What would you leave them with as they walk out of this session to the rest of their sessions and then back to their offices by Friday?
So we've talked about a lot of new stuff, right? But actually, what's interesting is whilst a lot of this technology is new, there's nothing really new in money, right? Like money does what it's always done. So as bankers, what we do, it's pretty uncomplicated. We do debits and credits. We separate those by time, and we wrap them up in rights and obligations. And all of our products are built on that. The problem is we grow up in a world where we learn that through product formats like letters of credit, foreign exchange transactions, and things that are really complex in their implementation. But the fundamental things that they do are actually not that complicated. In fact, when we talk about stable coins, one of the most instructive things that you could probably read is actually the Bills of Exchange Act of 1882, which is a UK law, which talked about how bearer instruments worked. So we've got mainframes and the Bills of Exchange Act. How many more bingo cards do we know of use cases?
I think we're good, I'm good.
So understanding where we've come from a money perspective, understanding the fundamental purpose that financial products achieve for clients, and how people use that money to exchange trust and value in their daily interactions, I think we're getting an opportunity to zoom out from all of these constructs and look at how people are using these new technology forms of money to achieve the same outcomes, but at an internet speed, right? We no longer go to the corner of Dad's office to look at Encyclopedia Britannica if we want to look something up, right? But we still have to go through this agency banking format of international money transfers to move money. And so all that's happening is we're getting rid of the Encyclopedia Britannica and moving to internet-based money. So as long as we can zoom out, look at what the money does, that really helps us make thoughtful decisions with our furniture arranged in the right way and the IKEA factory. And I think that's a really helpful, I think that's been helpful for me, and hopefully that can be helpful for other decision makers as well.
I think it's fair to say that if you came here hoping for all the answers, we probably failed you, but I'm pretty sure you didn't. I'm pretty sure you came here wanting a good conversation, some insights, and guidance towards the right questions. I know I've learned a lot. I hope we have delivered against that. I am pretty sure that when we get together next year to discuss the future of value, some of this complexity will have been resolved, and a lot more complexity will have been added to the mix. But I guess that's what we all signed up for. Please put your hands together for my fantastic panel. Thank you guys so much.